Gonna go through the weekly trading roadmap, look at some of the event-driven risks for you guys, and see what we could potentially trade this week. A little less heavy on data points this week. We've got more central bank speakers to take a look at, as it seems even early on in the week. But then moving into the rest of the week, again, a few other central bank speakers, and then some bond OPEX. So let's just take a look at some of the events, and then we'll take a look over at the Bund and the Euro stock futures, see how those markets are shaping up with with regards to their technical structures, and see if there's any little opportunities that we might be able to show you guys for the week ahead. So first, starting off with Monday. Not much on the data point front. We really only have the U.S. existing home sales. But from a central bank perspective, we actually have quite a few ECB speakers. The ECB's Coor, Nowotny, Pret, and then from the Fed, we've got the Fed's Lockhart, which is also a voter, and he's classed in the middle. Now, I would say, from the ECB's perspective, obviously we just had the FOMC meeting last week, so as you guys may have known, there was quite a dovish FOMC. So they did not hike rates, and they said there was a bit of concern on the global outlook. So obviously, from that standpoint, it seems as if the Fed's kind of held back for now, and we know it seems as if we could actually start seeing rate rises, not even in 2015, but potentially even 2016 if the data doesn't really persist and the global outlook doesn't really fix itself. But moving over to the ECB now. The ECB's Cure and Pret have also been relatively vocal as of late, stating basically that they could potentially be looking at extending QE. Just the way they're talking, and they're a little bit more active and vocal about it. Potentially, we might be looking at something ahead, maybe in the meeting in October or in November, December, whatever it may be. There could be something in there where we could get either a potential extension of QE or a boost of QE, the actual size of QE from the ECB. So keep your ears open, because if we do get a bombshell, something that actually says a little bit more affirmatively that we're getting something from them, that could start moving the markets a little bit, especially some of the European equity markets. The European equity markets have obviously been relatively weak recently, and we'll take a look over at those in a few minutes. Moving on to Tuesday, we've only got the Fed's Lockhart again. Really no data points to be keeping over to take a look at. Wednesday, we're looking at the European Manufacturing and Services PMI. Obviously, keep an eye on the German ones, which come out just before then. We've also got the U.S. Manufacturing PMI, and then from a central bank policy perspective, we've got the ECB's Draghi, and I've put that a little bit more bold. Obviously, what he says is going to matter a lot more, as he is the head of the ECB. So do keep an eye on what this guy is saying, because if he actually says something potentially about extending QE, I think that could send some jitters into the market. So do keep an eye on that. Again, we've got the Fed's Lockhart on Wednesday. Moving on to Thursday, we've got the German IFO, U.S. durable goods, and the U.S. new home sales, and then we've got the Fed's Yellen speaking. So let's just see if she has anything more to say after what she recently said in the FOMC. Obviously, we're not going to get much from her, because the Fed's Yellen actually had her chance to say what she had to say in the meeting. But nevertheless, if there's anything she might want to add, maybe she's seen the reaction of the markets and possibly wants to add her own little 2 cents in, potentially stating that maybe give a little bit more of a hawkish stance, because maybe the market's seen it as too dovish. You never know. Just keep your ears open, because potentially she might give us something there. We've also got the ECB's leading dove, speaking on Thursday. Moving on to Friday, we've got the U.S. GDP. Quarter on quarter, the U.S. core PCE, which is obviously the measure that the Fed look at the most. So I'd really pay attention to this figure, because obviously we get any big surprises to the upside, maybe that puts a little bit more market pricing towards a hike again. You just don't know. If inflation pressures are on the table and they start arising, then they might not have a choice but to do some sort of a hike or some sort of normalization. So do keep an eye on that figure. It's really quite important. We've got the U.S. University of Michigan Consumer Confidence, the final reading, so it's not going to be as volatile as the preliminary reading. And then again, we've got Weidman, a hawk. He's really quite important because he is a hawk. He's basically the one, the major one that's ever really opposed any sort of QE or accommodative policy. So do listen to what this guy has to say, because when he starts turning dovish, that's when the market actually reacts. Because it's really when the hawks start turning dovish, when the doves start turning hawkish, when the market actually takes note of it, because that could change the voting structure. Now, we also got the Fed's Bullard and the Fed's George. They're non-voters, of course, but leaning hawk and hawks respectively. So do listen to what they have to say as well. Also, we've got the Bund and Bobble Schatz options expiry. Do keep an eye on the flows. Usually around 3 o'clock, I've found around 3 o'clock, 3 p.m. London time, you usually get some flows into the cash bond settlement. So just keep an eye on the flows there, because potentially, when people have size to do, they usually do it around that time, and that's usually what I'm looking to execute a few trades. Looking at the risk and money management plan, we've obviously got not much, I think, where I can weigh too much on one particular day. I'm giving myself a little bit of time to settle into the week. Obviously, Monday and Tuesday. 15% risk allocation each. Then Wednesday we've got the ECB's Draghi speaking, so I'm giving us a little bit more risk allocation, 25%. Thursday 20%, and Friday obviously with the PCE, giving myself a little bit more risk allocation on Friday. So that is basically my risk and money management plan for the week ahead. Let's take a look at how the markets are shaping up, and if we could see any potential opportunities here. Let's look first at the Euro Stoxx 50 futures, the equity index in Europe. So the way this is shaped up at the minute, and I'm just going to scrunch this in to give you a little bit more context about how this is panned out. Obviously, this was our range pretty much for the majority of 2014. We broke out in the beginning of 2015 on the announcement of QE. This was the day right in here, if I remember correctly. Right in here, this is the day we had the S&B move its floor, and that's where they started punting on ECB QE. We had this big rally into this region, so we started auctioning up into this value area zone up in here. Couldn't quite hold that bid. We started drifting off to the downside. Then we started getting a little bit of volatility with Greece, and then obviously the China story unfolded, and we got this really rapid move to the downside, which took us all the way really. We got back into this range, as you can see, this big range in here. The market came back into that value area zone and just pretty much vacuumed its way all the way to the other side of it. And now we're kind of sat in this little range in here. Now, I like to give a little bit of context and remind myself with the market where the market is in the bigger picture before I start, looking at the more intricate levels and the areas where I want to take part. Now, the important thing is here, we saw on the 9th of September at the beginning of the month, we tried to make a move up higher out of this consolidation zone, but we got rejected at this level, 33.27. Now, if you guys remember, I did point this level out to you guys in one of my roadmaps. You can see it's that high that we had in June 2014. So it's basically the high of this massive range. We basically came off that area, I'd say almost to the tick, and came back into this consolidation zone. We tested higher again. We met resistance at that previous trend line, and then we've come back and tested the other side of this consolidation zone. Now I've put in a bit of a level here at these 31.45s, just because we've seen basically it's the lower end of this range, the low of this day and pretty much the low of this day. I'm looking at this level particularly because not to trade it from an intraday perspective, but a level where I'm going to be looking at where the market's looking to auction. So if the market starts closing below this level, that's going to give me the first real indication that potentially the market wants to start finding new value to the downside. Now, we've yet to close below that level. We burst through it on Friday. We had a little bit of a dip below it, but we closed ultimately back above it. Now, if the market starts getting below here and starts building some auctioning time and volume value below here, that's going to start giving me a bit of an indication whether the market doesn't actually want to do any business in here anymore. Maybe it wants to start doing business a little bit lower and finding value a little bit lower. So that's going to be a little bit of my just a bit of a zone to be looking at. I'm not potentially looking to trade it intraday, but if we close below it, then maybe I might look for resistance there. So key little area that I'm pointing out there. Obviously within here, I'm not really looking, just from a daily perspective, not really looking at much within here. Just again, maybe a test of this trend line, but that is still quite far off. Let's look at the weekly structure on the market profile for you guys. So the close of the week, as you can see, was 31.53s. I've highlighted the 31.52s. So 52s and 53s are quite important. We've got the VPOC of last week there and the close just above that. I would assume, if everything, if not much changes overnight with the S&P, would be opening around this zone. You just never know with Asia nowadays. Asia might come in and just start slamming the S&P lower or higher, respectively. But whatever the case is, I mean, if we close a lot, if we start opening quite a bit higher, I might look for this to test this close again, especially after that really weak day that we saw on Friday on the OPEX. Now, what's interesting is we've got this really poor low. I really don't like this low. I think that is a really poorly auctioned low. Usually, a good low is what you would see in here. That's a good low because you see excess. There's excess through the low. The market's tried to auction lower. It's left a tail. A buyer stepped in right in and lifted it right through here. It's almost as if the selling just kind of stopped and slowed down. No real buyer stepped in, but as the market started trickling higher, those sellers started covering, and we left somewhat of a poorly auctioned low. Now it could stay for now at least, but I don't really see it staying for that much longer. So it could be potentially for me a little bit of an area I think the market might want to test either early on in the week, or if we find value a little bit higher and then test later on in the week, I might be looking for that later. But ultimately, the value area low of the week is 31.28s. 31.26s is that poorly auctioned low. So I think this pivot area is quite important. If we auction below these 52s, that's where I'm potentially looking for that move. If we start auctioning below that, let's say we've pushed through it by 8 to 10 ticks, we're holding below it, using it as resistance, I might start initiating shorts here with a target of this low nestled in here. So that is how it's looking around the value area lows of last week. Anywhere through that, really, the next real area I can look at is basically this value area, that really massive week we saw, 30.66. I think I mentioned this last roadmap, with the 30.34s, a little swing low in there, and then the 30.13s swing low, the beginning of the massive buying tail, all the way down to the 29.51s, which is that pretty big low in there. Moving up to the upside, we can see a nice little confluence zone. I think this could be a little area potentially worth, early on in the week if we get here quickly, a decent short. Obviously, if we're building too much value here and then, we start halting and waiting just below here, and then we bust through it, I think it's not going to be as good as if we get here pretty quickly. It's all about time and context. I've learned that. One major thing I've learned from Lee Gibbs, which is one of the biggest traders at Futex, he always told me, like, it's about time and context, when it gets there, how fast it gets there, and if it gets to this area pretty quickly, I might look for initiate. Between 32.06 to 32.08, we've got the value area high of last week, value area low of the previous week, and then just before that, I mean, if we get through that and hold, I'd say the market might want to start looking to auction this, because it was a previous VPOC, so very well auctioned the previous week, but then this week we kind of just got right through that pretty quickly. Ultimately, there's a bit of a zone here at 32.41, the previous value area high. Obviously, this has all been adjusted because there's been the rollover. The contract's now rolled over, and then looking up to this area here, there's a nice little high volume node at 30 to 40 and 41s with a POC, just a very high TPO count there. So potentially in that area there could be some resistance. Now ultimately what you're looking for, that the tail, I think from a volume perspective, really starts around here, around 3250s. All of this excess really, even though we've got other TPO counts, it's just a really big tail for me. So if we do get through this a little bit and push a little bit to the upside, do bear in mind that the tail kind of starts here, and that could be a potential area where sellers step in. But ultimately through there, if the market is willing to auction this out, we could start looking to make our way and build a base towards this area around these 3288s, which is just short of that weekly high, as you can see in here at 3286s. And I won't go a little bit further than that. Obviously, as you guys know, that inside week that we false broke the previous week is at 3297s, and then the recent swing high is at 3328s. So this is a little bit of context on how this market's shaping up. Obviously, like I said, it really does depend early on whether we're looking to start holding below this VPOC. If we are, maybe that could give us the indication we're looking to attack this low, either leave a bit of excess and get back inside, or if we don't false break it and start holding below these 28s, holding below these 26s, and building value, then that could really open up the downside quite aggressively. So do bear in mind, it depends how the market's auctioning here. Do watch your price ladder. Do see how the buyers and sellers are interacting around here. If you see strong sellers, if you see size coming in, people having to do business, I wouldn't stand in the way if it starts going. I'd look to position myself with them. Moving over to the Bund. What's interesting about the Bund, obviously, putting that again into a bit of context, obviously we've seen this is the massive rally we saw 2014 all the way up into this area. We saw this really, really big sell-off in April and May of this year. So the market started getting really quite volatile in this region. You can see sold off, had a bit of a bounce, sold off again, had a bit of a bounce. But every time we bounce and we start looking to build some sort of structure to the upside, we rally for a number of different days, and then all of a sudden this big sell side action comes in, and then we rally for a bit, can't quite sustain it, false break, and then shank down. And then this has been a little bit different. You see, this buying action has been slightly different to some of this other price action we've seen. Obviously, this is where we saw the ECB. The last ECB, it was quite dovish. Potentially, there could be a bit of pricing in here, but again, we saw a bit of a rally, and then it got slammed right back down again just before the FOMC. Ultimately, now, we found a bit of support here at that previous inside day high at 153.61, which was also this low in here. So this is a really good risk reward trade right in here, which I think I pointed out last week around that region on the profile. I think I pointed it out. Hopefully I did. But it was a really nice little region in there because this is a previous value zone that we rejected. And then we sort of rallied really quickly right through here. This is the FOMC day, obviously. So the dovish reaction, Bunds rallied, and then Friday we held this closing gap in here and then rallied and took out basically the whole of this day. Now, from this perspective, you can say, okay, the market might have entered a bit of a short-term bull phase here as long as we're holding above these 155.32s. But if we take a look at the structure on the weekly profile, it's just one thing I wanted to note for you guys. Just gonna tidy this up here because it seems as if it hasn't updated. Let me just quickly put in these levels for you guys. So what's really interesting and what I wanted to point out, delete that, is the structure on the weekly. The VPOC for the week, last week's VPOC, is still nestled at the bottom of the weekly range. So the value area low basically comes in pretty much at the low of last week at 153.50s. So 153.51 is your value area low. The VPOC is still all the way down at 153.71. So we did not, after that whole rally Thursday and Friday, shift VPOC higher. And frankly speaking, we've got this huge, compared to what we see above it, this really big value zone, this bulk of accepted value down here, and then this really low volume and TPO count area from here all the way through, going all the way up until this region. Again, this is where we see the first initial bulk of value. Now the reason why I'm mentioning this is because if I just move this up to around this level here, it's 31s, I actually like that level, is if you take a look at this profile, we obviously close around 155.41. It's pretty bullish close on the week, as you can see. But do bear in mind, if we start coming off early on in the week, and we're closing back below these 155.31s, which, you know, if you go back, you can't see it because of the rollover, but if I showed you just really quickly again on this, these 155.32s, 31s, you can see, going back, this was the high before we had the massive sell-off here. This was the high here before we had this sell-off. This was kind of where we were getting capped, and we rallied. Once we got back below that, we shanked again here. We pivoted and sold off. So I'm looking to see what the market's reaction is early on in the week around these 155.31s to 32s, because, you know, if we start not really holding a particularly spectacular bid above here, then maybe there's some scope for the sellers to come back in and drive this lower. Now, in that scenario, obviously it is, you know, it's a scenario that we could hold above this and start rallying, but I feel as if the structure below here is just really weak and flimsy. You know, we rallied really quickly, and it's not really until we get down to these regions in here where we get some really decent structure. So I'm not really seeing anything that could potentially hold this market back from, you know, slumping back into this weekly range. So a potential scenario is if the sellers step in around this area where we open, get us back below 155.31s, take us through the other side of this value area and break below the value area high of last week at 155.05s. Below this region, if we can hold an offer below these 155.05s, that's where I might seek to initiate a short for the week to potentially see this come and basically auction off a lot of this region. Now, you're not really in this region. I wouldn't really be crazy about buying it anywhere. Really, this could get all the way down to this bulk down at 153.93s to 94s. You know, it's a pretty big region in here. You know, but ultimately that's where the volume and the TPO start building. So, you know, do bear that in mind. You know, if this starts coming back into this area and, you know, you're bullish, but, you know, you don't know, not quite sure to buy it, just be careful, because once we get back in here, this could just seek to fill this whole zone out, all the way down to this area. So, you know, VPOC 153.71s. Like I said, the top of this block around 93s to 94s, but ultimately you could look potentially in this area here. We've got this little LVN just nestled in there around 154.01s, which looks like a pretty decent little area. With the weekly lows there at 154.31s, that could be, at least for me, I won't be looking to potentially initiate longs there, but potentially to cover some shorts if it's getting anywhere near this area. And then we've got the value area low that week at 154.59s. Like I said, value area high 05s, the 31 level, the close at 41s, and the high of last week at 155.51s. Now, another scenario, let's just put that out there. If we get down to this value area high and hold the 05s, then potentially we're looking to reject this area. That's also a scenario. So if we hold in here and we start bidding back up, you know, that could potentially mean the market wants to start shifting value and seeking that a little bit higher. But do bear it in mind, that could be a bit of a scenario in there to keep an eye out on the buttons. Right, well, thank you very much for listening. That's pretty much my roadmap for this week. Good luck for the rest of the week. We'll speak again on Tuesday when I do my price ladder analysis, and then again on Friday for my weekly market wrap. Good luck and trade well, guys. Bye-bye.